Good morning and welcome to episode 2 of BuiltPlace's Housing Conversations. Today we're going to be looking at the position of first-time buyers, and I'm delighted to be joined by Peter Williams. So first of all, we're going to have a quick look at just an overall number here, which is the number of first-time buyers over time, so looking back over the last 50 years or so. And as we can see more recently, the number of first-time buyers has recovered from the immediate effects of the credit crunch in 2009-10 and are very close to the levels that we saw in 2006-7. But actually, although there's a lot of debate about the exact level according to a number of different sources, we can see that the number of first-time buyers is still well below the levels that we had seen during the 1980s, late 1990s and early 2000s. And so, as mentioned, I'm delighted to bring in Peter Williams today. And so, good morning, Peter, and I've made the same
Morning.
mistake again, so let me just flick over.
Yes, I mean, just on that, Neil, if I may, clearly that recovery of first-time buyer numbers that we're seeing there is partly, as we'll go on to discuss, is partly a product of government interventions.
Absolutely. And, first-time buyers have been a political priority for a long time, irrespective of political party. And, for the last 10 years or so, although there's been a lot of talk about home ownership more recently, first-time buyers, a lot of talk about increasing housing supply, home ownership has been the clear priority and the overriding priority. And so increasing the number of first-time buyers has been an essential part of that.
Yeah. We wait to see really how that plays out in any recovery going forward under COVID-19, the extent to which government prioritises home ownership recovery above other things.
Absolutely. And so it might just be worth having a little talk about what's happened to first-time buyer numbers. Peter, you can't see it, but I've got your floating head in the chart, looking at the immediate period of the crash, and then for a number of years the first-time buyers had remained relatively low. It was only in 2013 that they actually started to increase again, when government had a number of announcements, particularly around the Help to Buy mortgage guarantee scheme.
Yes, I mean you can see really from that chart how it starts to lift off in 2013, and we've had fairly sustained growth from there. We had a relatively brief period with mortgage guarantee and mortgage support schemes for 3 years, but Help to Buy has been the one long run consistent. Of course, all of us would ask the question, how long is Help to Buy going to continue? It's hard to see how government's going to step back from that in planned ways, given the context we're now in.
Absolutely. I mean, what's interesting about that chart as well is actually the number of first-time buyers has flatlined for the last couple of years, and there's been some quite significant regional differences on that, and the viewers will be able to see at the moment the chart of comparing the number of first-time buyers in London compared to the rest of the UK, and the recovery there. The recovery in London, just didn't happen at all, and actually numbers are below where they were back in 2013-14. And so there's clearly some regional differences, and for me the important thing there is the big increase in is the ability to actually borrow the deposit, particularly with the limitations around the availability of higher loan to income ratios and also higher loan to value ratios.
2008-9, other countries saw significant price deflation in their housing markets. The UK, because of the support measures we've been talking about, basically sustained prices at quite a high level, a relatively limited contraction. In fact, a report we've just released for Acadata, if you'll forgive me, highlights the slow growth. And in fact, the 2008-09, actually its impact on affordability and the market was relatively short-lived. So it's slowly gone on, but we haven't seen the big reduction in prices, and that, of course, is leading to the affordability pressures you're highlighting here on a regional basis, which have built and built and built, not least in London.
Absolutely, and it's worth just highlighting on the affordability pressures. If we look at the affordability that most people immediately think of, which is the cost of your mortgage repayments, most mortgages these days being repayment rather than interest only. And actually, as the chart I've got up at the moment shows, repayment affordability is well within historic normal levels. There's not a problem with the cost of servicing the mortgage, despite record high house prices and the stretch. And we've got there's clearly two factors there that have played a big part. The first is the increase in mortgage terms, so the length of time that you borrow the mortgage for, and we've seen that stretching out quite considerably in recent years. And the other one, obviously, is the rapid reduction in mortgage rates, particularly in recent years, but certainly over the longer term.
Okay, we may be exploring negative interest rate mortgages. I gather Denmark has them and other countries are beginning to talk about it. Bank is beginning to have a discussion about it. And in term length, we're already running up against the problem about lending into retirement. And therefore, there are limits to how far you can push mortgage terms out.
Absolutely, and talking about lending into retirement, clearly the age at which people become a first-time buyer is an extremely important part of that.
It is. And I mean, what's striking there, if I may, Neil, sorry, but
Absolutely.
I mean, as somebody of a generational difference to you, I mean, what's striking here to me is how young people were to enter home ownership when I joined home ownership. It was normal to come into home ownership if you had the opportunity in your early 20s. We're now talking mid 30s. It's a big change.
Absolutely, the drop in the number and propensity to buy amongst particularly first-time buyers under the age of 25 is quite substantial. Yeah. I've put the chart up here from the report I wrote a few years ago about missing movers, and there was a big drop off in the proportion of buyers under the age of 25, whereas actually the recovery for those amongst the from 25 to 35 has been reasonable. They've recovered back to the levels they were in 2006-07, but perhaps not up to the levels that they were prior to that. And so inevitably, as the age of first time, as people buy for the first time later, their ability to take on an ever longer mortgage term will be hit by by retirement. And so, as you say, there's only so far that we can go. And the big question at the moment is around the availability of higher loan to value mortgages.
Are we going to move on to that?
Yeah, so I've put the chart up now looking at the distribution, Peter, so your head is floating in front of it. So,
high LTV gets a very poor press, but at the same time has been an essential component of the UK housing market over decades. If you reach back to the 70s, local authorities were offering 100% mortgages, which worked remarkably well. In actual fact, the return of high LTV is going to be an absolute essential to the recovery of first-time buyer numbers as we go forward. It was very striking in the early days of COVID how the market retreated from high LTV. A number of lenders have recognized the need to get back into that market if you're going to keep some momentum in the first-time buyer market, and therefore there's some return to that. Although I suspect we won't see as strong a high LTV market as we have over the last couple of years. And even that was low compared to the historical long-term trends. So we've still got problems there. Again, question mark what that means ultimately for government intervention.
Yeah, that's a question I've been interested in even before this COVID period, is the tensions between government policy aspirations, which is to increase home ownership. So inevitably that means trying to increase the number of first-time buyers, compared to, we've seen a much greater regulation from the Bank of England and other regulators, and there's clearly a tension there. We've got the soft cap on higher loan to income ratio mortgages, which are undoubtedly limiting the ability of first time buyers, and that may well be a significant part of that chart we saw earlier on around the London trends.
Yes.
And so we're likely to see further pressure from government to relax some of these regulations.
And it's a real problem area because the capital weightings applied under BAL to high LTV are much more punitive than lower LTV weightings. The upshot of that is it costs lenders a significant more capital provision to put up high LTV loans. That's one of the factors in the pricing. I mean, we know, as you pointed out earlier, when you look at band by band, the extra charge for a very high LTV loan has been quite disproportionate over time. Competition has forced that down, but there's still going to be a margin there of cost, which lenders can't ignore. So there is a real pressure point there, I think, for lenders trapped between, if you like, political pressure on the one hand from government and regulatory pressure on the other hand.
So do you think we may well see a mortgage guarantee type scheme come in to ease some of that?
Well, I personally think that had considerable merit. I mean, it wasn't widely used by a lot of lenders, but it encouraged some of them to go back up the LTV curve and self-insure. I mean, the government scheme was clunky and expensive, but it gave confidence to, and maybe on the back of the experience previously, government could come forward with another scheme which was lighter touch and just as effective in giving lenders confidence that they had government support in going up the LTV curve. Question mark, obviously, is where the regulator will stand in that process.
Absolutely. So I suppose, I'm not sure if you've seen today's news, but there's a lot of excitement about the number of sales agreed reaching nearly previous levels. I have some concerns about estate agents playing the game with tagging properties as sales agreed. I suspect they're slightly more likely to in the current environment, particularly if they know it's a metric that is being followed by us all.
I totally agree.
And so, we've got, the news currently is there's a lot of people pushing for positivity, but
the sorry to interrupt, but I mean the phrase "one swallow does not a summer make" is absolutely something we should bear in mind here. When we hear this kind of talk about big recovery, papers are still slightly irresponsible in the way they report this stuff. They're too quick to talk things up. And we need a careful, balanced approach, which is obviously what we and others are trying to do at this time.
Absolutely. I suppose the question that I frequently get from prospective first-time buyers and journalists is, if we have this market crash that is looking quite likely given the economic environment, rather than the immediate housing market environment, is that going to make up for the lack of correction the last time round? Will if we did have prices fall, is that then suddenly going to be a brilliant bumper period for first time buyers to get into the market?
Well, I mean, of course, this is where the answer is no. I mean, logically, from an economist's perspective, you'd all think, oh, people are rational. They join when prices were lowest. But of course, that's not what people do. They join when they see prices on the move upwards. And I'm afraid history shows us that's what they do. There will obviously be some people who join at the bottom, but most people always worry, will it go further down rather than up? And they worry about losing the value that they've put into the home. So I think that issue of how the UK deals with this becomes very important. It's striking in other countries. There is a big debate about the cliff edge at the end of furlough schemes, and a real worry that housing markets in other countries will face this downward spiral of people losing their jobs, losing their homes, and that then triggering a forced sales of mass properties onto the market, and that itself ratcheting down prices over time. Now, that's the question mark for us here, I think, Neil, is that a likely scenario? And if it was emerging, what would the government and others be doing about it?
Yeah, and possibly a topic we can have a conversation about in the future
Yeah,
on.
yeah.
And where we are at the moment, we are thinking about what topics we can talk about, and so we'd welcome any people getting in touch. I've just put my contact details down there at the bottom. Feel free to drop me an email or contact me on Twitter and let us know what you'd like us to talk about. We've got a whole range of experts in the BuiltPlace stable, and also a number of other people that we'd be very excited to have conversations with.
If I may, Neil, on that, and I think one of the emerging questions whether there should be a good debate is partly about where the geography of demand is and how it might change, and whether over time we will see a shift from urban to suburban to rural, and exactly how that plays out across property type and area. That's a key debate for the future, and it would be good to hear from people about that.
Absolutely. So I think we've probably should we finish round about there. We've had a good discussion there. Hopefully that's been of interest to everyone watching. So thank you very much for joining us, and we'll hopefully see you again next time.